Hello, and welcome to the 2021 North Coast Ventures annual meeting. This is typically a closed-door affair, but like most events over the past year, this one's going to be a bit different. I'm here on location at Progressive in advance of the Fireside chat portion of our event. As our first annual meeting that is virtual, we are excited to be able to include a much larger group than ever before. As of this morning, we had nearly 800 registrations, which was terrific to see. Given the size of the audience, and given that we are regulated by the SEC, we would like to take a moment to remind everyone of a few quick ground rules. Number one, if you are watching this, you are a guest at a private meeting of North Coast Ventures. Any opinions expressed are intended to be educational in nature and to share perspective on the startup environment. These opinions should not be used as a basis for investment decisions now or in the future. And lastly, this is not an offer to invest in or purchase securities. With that said, we're excited to share what we think is a terrific agenda. We will start off with a review of 2020 and a state of the early stage ecosystem. We will review the portfolio and offer key updates for our companies and our management team. The CEOs of 5 of our fastest growing companies will present 5-minute updates on their ventures. And lastly, we'll wrap up the evening with a fireside chat with Tricia Griffith, the CEO of Progressive Insurance. In that conversation, I will ask Tricia about Progressive's position as a data and analytics company, their internal innovation group, how they work with startups, and how they've innovated throughout the COVID crisis. Before digging in, I'd like to offer a few important thank yous. First, to our main event sponsor, Marketing Artificial Intelligence Institute. The Institute is a media event and online education company founded by local entrepreneur and longtime North Coast Ventures supporter, Paul Reitzer. The organization's mission is to make AI approachable and actionable for marketers and business people alike. The Institute developed the Marketing AI Conference, which brought over 300 attendees to Cleveland in its inaugural year. And in 2020, they launched AI Academy for Marketers, an online education platform and community built to help marketers understand, pilot, and scale AI. Paul and his team also recently raised a $1 million seed round to accelerate the Institute's growth. We appreciate how the Institute contributes to the success of the ecosystem, and we'll talk more about our work with them later in the program. I would also like to thank North Coast Ventures' nearly 30 Innovation Council members. These companies and institutions are strong supporters of the startup ecosystem here in Cleveland. And by partnering with North Coast, they are contributing to the growth and success of our portfolio companies. Innovation Council members will provide critical voice of customer feedback to us, our team, our diligence teams, and our portfolio companies. As a result of this proximity and engagement, many Innovation Council members also become customers of our portfolio companies. I'm going to call out 2 logos here. The first is Jumpstart, a longtime supporter of our activities and a financial supporter of the management companies of the first 3 funds. The second is the Ohio Development Services Agency. This is the group that oversees the Third Frontier program, which has provided over $15 million of matching capital that leverages the capital of our own private investors. Lastly, we would like to thank the investor members of North Coast Ventures. We're deeply appreciative of the support we've received as investors and their commitment, now more than ever, to engage in our process, share industry expertise, and leverage their networks to help build successful startups. With that said, let's dive in. Well, to say 2020 was a year unlike any other would be an understatement. It was a tough year for most of us. That said, building and investing in startups is extremely challenging even in the best of times. Success is driven by big ideas, innovative products, market timing, and a bit of luck. Most importantly, though, success is driven by the performance of the founders and their teams. And despite the tremendous strain on their companies and their families over the past year, our CEOs and their leadership teams have risen to the challenge to build products, acquire customers, raise capital, and grow their companies. Looking back, we are humbled by their efforts and the results they achieved. And by successfully navigating challenges that would have been difficult to imagine just a year ago, most of the companies that entered 2020 in a strong position exited 2020 in a similarly strong position. Further, due to the nature of COVID accelerating a number of existing industry trends, several of our companies were catapulted ahead and saw their market opportunities dramatically accelerate. Last year at this time, we held the annual meeting at Corporate College with over 250 people in attendance. While we didn't know that it would be our last in-person gathering for more than a year, we did anticipate a big year ahead. We shared an analysis of past fund performance that helped sharpen the investment thesis of our new funds, which was business-to-business software as a service companies. For those not familiar with the space, B2B SaaS may sound narrow and perhaps not that exciting, but in reality it's very broad and interesting because this type of software approach is how industries such as healthcare and insurance and functions such as marketing, market research, and HR are being transformed today. In about 20 minutes, you'll hear from 5 CEOs doing just that in those industries. Also at last year's annual meeting, we unveiled the new North Coast Ventures brand and an operating approach that unifies how we think about and position the funds. And finally, we shared the recent launch of 2 new funds, Seed Fund 4 and Acceleration Fund 2. The Seed Fund invests in minimum viable stage companies, typically with 3 to 5 employees and modest demonstration level revenues. The Acceleration Fund invests in companies that have achieved product market fit, typically have $1 to $10 million of recurring revenue, and are raising a Series A or B round. Shortly after the annual meeting last year, we shifted into virtual mode. It looked and felt different for our smaller events like screening committees and diligence teams, and it really looked different for our large-scale events like Investor Insights Series, which was sponsored by PNC. Though a new format, these events engaged more people last year than ever before. The highlight of the series was our One Crucial Thing event, which featured 20 presenters, each sharing one crucial thing for startup success. Presenters included top-tier VCs like Brad Feld from Foundry Group and Adam Valkin from General Catalyst. We also had Adam Bain, the former COO of Twitter, and Mark Roberge, the former CRO of HubSpot. We are pleased to announce that PNC will support the Investor Series once again in 2021. Last year, we fully embraced the From Home setting and launched a 3-part Venture Flick series sponsored by KeyBank. As part of the series, we screened 3 startup-related documentaries and held panel discussions afterwards. These sessions attracted hundreds of attendees and were a lot of fun. This screenshot is from the final session that addressed women in tech and featured Amy Brady, the CIO of KeyBank. On to the portfolio reviews. For the early seed funds, Seed 1 and 2, we are now in the out years. Some of these companies have successfully exited while others were wound down. We continue to work with our remaining portfolio companies to help drive growth and liquidity. A number of companies made strong progress on this front in 2020, with Fund 1 company Collaborant achieving an exit last spring. Though it was a modest 1.6x exit, it is a win, and with that distribution, the fund has now returned, meaning cash on cash, 124% of member capital. 6 companies remain active, and we're optimistic that at least 3, Amplifund, Exactor, and Neuros Medical, will drive additional returns for the fund. Neuros Medical recently announced a $40 million round, which is intended to take the company through FDA approval and into commercialization. In Fund 2, 2020 saw Ahology, which had a nice exit the prior year, secure a full earnout. Including that distribution associated with the Ahology earnout, we have now returned over 70% of North Coast 2 member capital. We have 7 active companies remaining in the portfolio and are very confident in the potential of 5, including Satellitic, which has secured strategic investment from BP Ventures just last year. For the next set of funds, Seed 3 and Acceleration 1, we exhausted our initial capital for investments. Remaining capitals for follow-on investments. Seed 3 now represents our new, more focused approach of B2B SaaS and has companies growing revenues faster and raising capital faster than the earlier funds. We are pleased to report that a company from this portfolio is working to close an acquisition within the next several weeks. This will be the first exit from Seed Fund 3, and we look forward to sharing more information as far as details of the transaction and timing for the return delivered to our investors. We have very high expectations for this fund, and you'll hear more from several of these companies later tonight. Acceleration 1 portfolio companies come from each of the first 3 seed funds. One of those companies is Ahology, so their earnout also created a distribution event for this fund. For Acceleration 1, we've had 1.5 exits to date. The full exit is Ahology. The half exit is OnShift, where Acceleration sold only a small amount of its holdings as part of the last private equity transaction. We continue to hold most of our investment in this company and anticipate a strong return from OnShift in the years to come. 2 of the companies presenting later, Remesh and Navistone, are in this portfolio. Shifting to the two new funds, despite being in the early innings, Seed 4 and Acceleration 2 are off to a fast start. You may have read Crane's Cleveland Business last week when they reported that Seed Fund 4 company MedPilot was in the process of completing a stock sale to a strategic acquirer. We expect to have some more information out to Seed 4 investors within the next week. Both of these new funds have held multiple closings to date, and we have commitments from 135 investors for over $6 million in the Seed Fund and commitments from over 60 investors for over $10 million in the Acceleration Fund. Both funds are actively making new investments. To this point, neither of these funds have leverage associated with the Third Frontier program. That may be about to change, however. We are pleased to report that an RFP was released, and we submitted two separate proposals for the current Seed Fund and for the Acceleration Fund. Based on investor commitments secured late last year, North Coast is positioned to have 50% leverage in the Seed Fund and 25% leverage in the Acceleration Fund. While there are no guarantees, we've been successful in our proposals for earlier funds and are very confident about what we've submitted to the state. We will keep our fingers crossed and look forward to providing an update after the award is announced, which we believe will take place on March 10th. Late last year, we developed what we think is a very innovative investment approach called First Fund. First Fund is available to any first-time investor in North Coast. Structured as a single-purpose investment vehicle, the entity offers access to the Seed 4 portfolio at a lower entry point investment, $10,000 versus the fund's typical $50,000 unit size. This approach is very strategic for us and is intended to expand North Coast's network by making it easier for more high-impact investors to get started. Per SEC requirements, anyone participating in the fund must be an accredited investor. First Fund members gain access to the asset class, learn the ropes of startup investing, and contribute to the success of the portfolio. As part of our RFP response to the state, we included commitment letters from 15 new investors for this fund. Well, that's the high-level overview for North Coast Ventures, but we are just one part of the ecosystem, so let's shift to the broader state of the early stage ecosystem. If you've seen nearly any of the presidential State of the Union addresses over the past 20 years, you'll know that nearly all begin with the statement that the state of our union is strong. Here in Cleveland and the broader region, the state of the early stage ecosystem is strong, but perhaps with an asterisk. There are some very positive developments to acknowledge and celebrate, and we will. But there are also some concerning aspects which must be addressed, and we will. On the concerning side first, we simply do not have enough startups being launched. Cleveland is one of the country's largest cities that does not currently have a startup technology accelerator program. Although our institutions produce considerable research and innovation, most of the resulting technologies are either not commercialized or are being licensed to larger companies versus being part of a startup. We don't see many of these research-initiated companies launched in a new startup that would fit with our thesis. We also don't have enough investors in the region. North Coast and the investors here can deploy more capital into this space, and we need more co-investors. There's a distinct lack of Series A capital in Cleveland, less so than there is in Pittsburgh, Columbus, or Cincinnati, for instance. Our companies have done a terrific job bringing capital from across the world, but to take full advantage of the opportunities to build a great startup ecosystem here, we simply need more homegrown capital and the type of care and feeding it provides. On the positive side, in addition to exit activity I just shared regarding North Coast companies, several non-North Coast companies have significant events recently. Just over a year ago, Scout RFP, a Cleveland-founded company, now in San Francisco, was acquired by Workday. This summer, Overdrive was acquired by KKR. And this past fall, it was announced that Within 3 received over $100 million in investment from Insight. And just last week, BuyerQuest announced its acquisition. The achievements of these companies are significant, and the resulting wealth and intellectual capital will contribute significant momentum to the early stage ecosystem for years to come. So despite the challenges I shared a moment ago, there is a lot to celebrate. Great companies are starting up, securing funding, and achieving growth. It's not happening as quickly as we would like, but it is happening. Our goal is to build on this success. As we look forward, I'm going to pass the baton to Alexis, who will talk about how North Coast is working with our investors and partners to help drive portfolio company success.
Thanks so much, Todd. Members of the North Coast Ventures Network, whether they are investors, entrepreneurs, or associated with our organization in other ways, have a wide scope of experience, ranging from starting and exiting tech startups to running large corporations. They also possess knowledge ranging from general management to specific functional understanding of marketing, sales, service, operations, and more. To further increase our awareness of our network's functional, industry, and startup expertise, we launched HubSpot as our first customer relationship management software. We've worked to create what we believe is the country's largest and most sophisticated early-stage investment fund contact database. By using HubSpot, we can better match the experiences and backgrounds of our more than 10,000 collaborators and members with the needs of portfolio companies, helping to drive success in the region. We're also able to enhance the efforts of our Ambassador Committee, a group of investors who are dedicated to forging and improving relationships with prospective members, portfolio companies, and corporate partners, like those in our Innovation Council. As Todd mentioned, our Innovation Council is a group of local, regional, and multinational organizations based in Northeast Ohio looking to promote startup growth in the region. By using artificial intelligence to help create educational content and share resources, we're encouraging mentorship and collaboration within our network. With the help of PR 2020 and the Marketing AI Institute, we plan to further automate our marketing efforts. We'll use AI to process data in more valuable ways to be able to better understand, connect with, and support our network, corporate partners, and entrepreneurs. This will ultimately accelerate startup company success and bring greater visibility to the early stage investment activity that is occurring in the region. Now, I'll turn it over to Lean, who will talk about how we are using this data to drive our due diligence and investment screening processes.
Thank you, Alexis. In the past year, we've engaged in pre-screening conversations with over 200 new companies, several of which received an invitation to present to one of our subject matter experts or investment screening committee members. We proceeded to due diligence with 13 companies and spent north of 125 hours engaging several of our members and network partners. And we welcomed 5 new portfolio companies whom you will either hear from or learn more about throughout our meeting tonight. Todd mentioned earlier our recent strategy refresh, and Alexis just talked about how we have evolved to put significant more structure behind how we leverage our North Coast Ventures network model. I'd like to give you a sneak peek into how we operationalize this model in deal flow, screening, and due diligence. We recently narrowed our thesis to business software as a service, and as we're looking for a better defined target, we better be looking at more places and cultivating new friendships all over the country. With our narrowed focus, we have also strengthened the composition of our investment screening committee by adding several members with a track record in technology exits. Tapping our network for subject matter experts is more important than ever now that we have a narrowed focus, and we've been fortunate that our membership has continued to evolve in diversity and expertise. Our evolving group of corporate partners continues to give us the voice of the customer as we evaluate companies and look to connect them to potential customers. One of our newest portfolio companies, Vitals, recently shared with us a list of 15 prospects that we have the ability to open doors with by leveraging the assets of our network and utilizing our sophisticated HubSpot database. By demonstrating to our outside partners the value that we add to our portfolio companies, we are able to syndicate and attract follow-on investments from top-tier venture capital groups all over the country. By operationalizing our network model, we will generate a larger number of companies that look like the 5 that you will hear from today. Companies solving big problems with novel solutions, great teams, and a clear vision for the future. But before you hear from them, I'm going to hand it off to Anne to tell you more about our financial reporting.
Thank you, Lean. I'm pleased to provide an update and share the investor reporting resources that North Coast Ventures provides to our members. Just over a year ago, we rolled out a new investor portal that members access securely from our website. The investor portal allows members access to their investment balances and capital statement reports. From these screens, investors are able to confirm their capital commitments, contributions, distributions, capital activity, and investment value. These reports are updated and posted quarterly to the portal's document vault. The vault is a document repository that houses executed subscription agreements, current and historical GAAP financial statements, capital calls, distribution notices, and the members' K-1s. Investors in all funds should be able to access these materials on demand. The portal is maintained by Winbridge, who is our fund administrator and tax preparer. I'm pleased to share that Winbridge has already completed the tax returns for Seed Fund 4 and Acceleration Fund 2. The 2020 K-1s for those two funds will be posted on the portal this evening. Investors in those two funds will receive an email notification later today when those K-1s are available to access. We anticipate K-1s for the other four funds to be posted prior to March 15th. Again, members will be notified by email when the K-1s are available to them on the portal for download. Please email or call me anytime with questions. Next on to Daniel for award presentations.
Thanks, Ann. Now we are excited to share our Member of the Year award with a member who has made an incredible impact on our fund over the past year. She is a key part of many due diligence teams. She's referred deals and new members to the fund and customers to our portfolio companies. She's advised our CEOs and is currently the board representative for Healthy Roster. The recipient this year is Sue Tyler. We were thrilled when Sue joined the fund because her background is just so relevant. Most recently, Sue was the CFO and treasurer of Medical Mutual of Ohio. Prior to that, Sue worked at Progressive Insurance. Sue has a deep understanding of healthcare finance and employee benefits. She's been a buyer of enterprise software. She's built businesses. She's led turnarounds, and she's acquired companies. I would like to hand it off to Sue to share a few words.
Oh, thank you so much. This is awesome. I want to say thank you to the North Coast Ventures team, to our portfolio companies, and to my fellow members. North Coast is truly unique in how our members and our corporate sponsors rally behind our founders and our companies. It's exciting to be a very small part of their success, to contribute to getting innovative products into the market, and to helping companies that might be really small today become large companies in the future. So the question now is wine or bourbon? Thank you.
I'm happy to see Sue will be enjoying our gift of bourbon and wine while in her bunny slippers. Now we are also excited to share our Company of the Year award with a company that really stood out over the past year. The recipient this year is Ahology. Ahology is a market leader in social media marketing. The company negotiated a $50 million exit to Quotient Technology over a year ago, but as you heard from Todd, the truly remarkable milestone in 2020 was achieving their full earnout distribution last spring, because it was such an ambitious earnout. So congratulations to Bob Gilbreth and the Ahology team. Bob would like to share a few words as well.
Hey guys, it's Bob Gilbreth. I was the CEO and co-founder of Ahology, now the CEO and co-founder of Hardy, and I am excited to accept on behalf of the entire Ahology team this Company of the Year award. Thank you guys so much. We're so happy, and ironically, we all got together and voted North Coast Ventures the Ahology Investor of the Year of the Century of our trip of 8 years award. Seriously, you guys were there at one of the earliest times in our history. You kept with us through the good times and bads, continuing to double down on your investment with us. And it was really exciting to have a great trip, have an awesome outcome, to be able to celebrate with you financially and in all other ways. And we're excited to get ready and do it all again and make it even bigger and better. So thanks again, guys.
Thanks, Bob. Now let's move on to the portfolio review. Considering we have such a large portfolio, we are going to cover a subset of portfolio companies today, and we'll share additional recordings with our members after the meeting. These recordings will include portfolio analysis by the fund managers, as well as recorded updates from many more of our portfolio company CEOs. I will start by highlighting 5 recent additions to the portfolio. We would like to hear from you if you think you might be able to make strategic or customer connections for these companies. We'd love to facilitate those connections. Let's start with LeaseCake. They provide a lease and location information management solution for tenants, landlords, and brokers. Between June and November of 2020, one of our members, Alan Brenner, worked closely with the CEO and was asked to join their board of directors. Fund 4 approved the investment this month, and they closed their $3 million Series Seed financing last week. LeaseCake is based in Florida, and this is our first out-of-state investment. We receive great deal flow from across the country, primarily via our membership network and funds that we know well through the National Angel Capital Association. Out-of-state investments was also addressed in the Ohio Third Frontier RFP, and so we have a system for how we would segregate these investments from the Ohio-based companies. Next is Thrivable. This software as a service company gives healthcare organizations the ability to instantly screen tens of thousands of patients, target the exact people they need to reach, and reduce the research cycle from months to hours. We engaged one of our top-performing portfolio company CEOs, Andrew Konya of Remesh, in our review of this company, considering Remesh also serves the market research industry. His feedback about this team and company's potential was definitely a positive data point. We approved this investment in November of last year. Next is Hardy. Also in November, North Coast Ventures approved a program to make 3 pre-seed stage investments in the amount of $100,000 each over the life of the fund. The objective is to allocate a small portion of the fund to deploy smaller amounts of capital into high potential companies that are earlier than the fund's stated sweet spot. Our investment in Hardy in late 2020 was the first investment made under this new program. Hardy is an employee referral platform that mines reputation networks, and the company is led by a founding team we are familiar with from Ahology. They are deploying a similar playbook to what led to success with Ahology. In that case, they worked closely with Pinterest. In this case, it is LinkedIn. They are taking a big swing, and we were excited to be asked to invest in their new company. Next is mVitals. This is an emotional health platform that helps employers improve morale, retention, attendance, and productivity. We invested in mVitals in early 2020. This was before the world shut down and the world's emotional health began being tested. Employee emotional health directly impacts the bottom line, and COVID has accelerated and amplified the issue. mVitals was developed by practitioners from the Cleveland Clinic, and the approach was published in a scientific journal. Also, Johns Hopkins Medicine has chosen to use mVitals in the wellness program they offer to employers. Finally, Alviere. This is a banking-as-a-service platform that enables businesses to provide financial services such as mobile payments, card issuance, and payment processing to their customers. This company is not technically a recent addition to the portfolio, but deserves a reintroduction. This Fund 3 company was formerly named Mezoo, and Mezoo's plan was to take a Venmo-type consumer application to market. Under the leadership of Yuval Brisker, the former founder of Toa Technologies, a local success story, the company has pivoted to a B2B approach. They're able to leverage an impressive technology stack that was developed to launch Mezoo into market and have already developed some great traction post-pivot, including closing $10 million of investment from Viola Ventures and Viola FinTech at the end of last year. So now we will move on to presentations from the CEOs of a few of our most exciting portfolio companies. I want to pause and note that you're hearing from 5 CEOs that have done a truly remarkable thing in navigating their companies to this point. They have demonstrated an ability to attract great talent, build teams, develop complex software products, identify product market fit and scale sales, and court institutional investors. A lot has to go right for a software as a service company to get to $1 million in revenue, and each of these companies has accomplished that milestone, with 2 of these companies actually passing the $20 million revenue run rate milestone. We asked these CEOs to take no more than 5 minutes to summarize what their companies do. In addition, we gave each a special topic to address relevant to their particular company. First up, I would like to welcome Andrew Konya, the CEO of Remesh.
Thanks, Daniel. So hi, I'm Andrew, CEO of Remesh. I'll give you a quick update from us from fourth quarter 2020. So for those of you who don't know, understanding stakeholders is already a massive pain point out in the world. About $80 billion a year spent on that when it's understanding customers, and $74 billion spent on understanding employees. So already multiple billion-dollar companies built in this space. and COVID made it important and harder. So customer volatility increased because no longer do we know or can we predict exactly what people do. And transitions to remote work increased the need to understand employees. At the same time, the barriers to doing all of those things got harder because it was harder to do things like focus groups and town halls and casual conversations. The traditional approaches that people take to it are interviews and focus groups to get depth, followed by polls and surveys to get confidence. And doing it this way tends to take on the order of weeks. Where we come in is that we use artificial intelligence to offer a new paradigm that eliminates that trade-off. It allows us to have a live one-on-one conversation in open-ended natural language with a large audience of people. And that turns that week-long thing into an hour-long thing. We package that into an enterprise-grade platform. We give it consumer-grade UX, and we design it with an experience that our participants love. Our model is to land and expand within huge companies. So we target Fortune 500 consumer brands, top 50 management consultancies, and sometimes some market research agencies. We land with a transactional deal. We think of it as a pilot and go in and try and win 10K pops at a time. And then we expand by turning those into $100,000 plus annual subscriptions that we grow. A few of our big customers are shown here. We've got about 120 customers to date. And our growth is now accelerating. So a few key numbers from fourth quarter 2020. Our bookings grew about 51% quarter over quarter from Q3 to Q4. A large driver of this is we've now seen a 2x year over year growth in bookings per ramped rep. So each one of our sales rep is now selling twice as much as they were before per unit time. We've seen a 3.5x year over year growth in our ARR, which is that annual business that we talked about, and we've now raised about a total of $50 million. At this point, a lot of our competitive advantage, I think, is in the people that we have. So we have amazing tech and an amazing product that our customers love and a business that's scaling, but we also have some of the most incredible humans in the world who are working on it. So we bring in people from Princeton and Harvard and Caltech and Columbia and Stanford and Google and program them to think and operate like a remesher and focus on solving the problems we solve. Our engagement is off the charts, so much higher than even your average tech company of our size. And I think that this is becoming our secret to being able to grow as aggressively as we are. So I think that sets us up for a position for aggressive growth going forward. We're managing the company towards a growth goal of breaking through 100 million in annual sales sometime in 2023. And everything we are doing now is to try and get us there. So before I go, a quick reminder on power that you all have, which is the power of the warm investor intro. So in our world, we live in a world of funnels. Leads turn into MQLs, marketing qualified leads, which turn into sales qualifying leads, which are stringent, more stringent, and usually all of that will turn into a win. And the number of leads and these things you need per win is quite large. And for an enterprise company like ours, the time scales here are quite large, like 9 months from a lead to a win. The power of a warm investor intro comes in a few fold, but talking in terms of time and money are the most potent. So from a time perspective, warm intros tend to translate into wins on about a half or a third the time scale that we would see normally. So you can think of that as shaving 6 months off of that normal funnel. The second is that it means that you can avoid all of those leads and MQLs that have to be driven before that actual lead would turn into a win. Investor intros that are warm skip all of that. So the result of it is, at least for a company like ours, it becomes a potent growth driver when we can partner with investors who can keep their eyes open for the companies that we would want introductions to and pre-warm those up and make them for us. Our average customer does about $120,000 a year with us, and it grows at a rate of about 130% a year, 140% a year, depending on the customer. So the result of that is if you can introduce us a customer we win, that gives us an asset that generates about 120 grand a year and growing. At this point, it looks indefinitely, and it accelerates our timelines and will help us hit our goals better. So appreciate all of you and everyone who supported us up to this moment. All the investor intros we've gotten to date, of which Todd Fetterman, if he's around here, is the winner. He's had the most of these, and challenge the rest of you to make them as well. So with that, I'll thank you for listening, and this concludes all of the updates on our portfolio companies. Thanks. Bye.
Thanks, Andrew. Next, we have Christy Beck, the CEO of Proformex.
Thanks, Daniel. I'm excited to share an update about Proformex today. Proformex was built to help advisors and brokers manage life insurance policies and grow their book of business. Historically, servicing life insurance policies has been problematic, especially for advisors that sell products across multiple carriers. Multi-carrier client holdings that include variable insurance products can also be difficult to manage. Antiquated carrier systems with limited data accessibility and these complex insurance products with opaque performance levers and interest rate levers all create a challenging service environment. On top of these challenges, the SEC introduced new regulations in June of 2020 called Reg BI that increase servicing and documentation requirements related to the life insurance industry. All of this is very difficult for advisors, and advisors need an easy way to access up-to-date information on policies under their care. And this is where Proformex shines. Proformex is a policy management platform purpose-built to analyze life insurance policies for risk and opportunities, as well as ensure that those policies are managed in compliance with regulatory standards. In 2020, despite a challenging year, we tripled revenue and doubled ARR, ending the year with 140 customers. Like many businesses, COVID changed how we worked and required us to pivot to a new normal. We shifted our teams to remote working and learned how to hire and train remotely. But more importantly, we had to navigate challenging pivots in marketing and sales, going from generating leads primarily from in-person events and marketing conferences to a much heavier reliance on digital marketing and channel partnerships. We also added 2 key hires to our leadership team. We brought in Amanda Yoho as CTO. Previously, Amanda led data science at Explorus after the acquisition by IBM. Amanda's experience in data science and analytics has really helped us make huge advances in our move-up market. We also added Steve Lands as VP of Sales. Steve's industry experience and leadership, as well as his track record of scaling 2 software companies to IPOs as a sales leader, will bring great experience onto our team. So our learnings over 2020, in addition with the 2 leaders that we brought in, really led us to refine our strategic focus into 2 primary customer segments with the greatest product market fit and long-term enterprise potential. With this strategic focus, we doubled down on expanding the platform to enable client policy management at scale for large enterprises. These large distribution enterprises are managing an ecosystem, tracking hundreds of thousands of client policies across thousands of advisors and hundreds of third-party life insurance case management service partners all across the country. With this evolution, we moved from being a point system to a full platform, enabling key enterprise-grade capabilities in data aggregation, data enrichment from unstructured documents, and predictive analytics. With this added capability across the value chain, this gives institutional enterprises and distributors a single shared platform to collaboratively manage policies across their enterprise, as well as externally with their service partners. With this expansion, we've nailed product market fit for our target customer segments. In Q4, we closed deals with 3 of the largest financial institutions in the country. These customers will account for roughly $400K in ARR in 2021 and expect at their full rollouts to be between $2 to $3 million ARR in 2022 and beyond. We're only a few months in on these implementations, but we're already getting word-of-mouth referrals from these customers to their peer institutions. Today, we're already a leader in in-force policy data aggregation, working with a network of over 200 carriers on behalf of our customers. We have 74 of the top brokerage general agencies in the country and 3 of the largest financial institutions in the United States. Our rapid pace of data aggregation and coverage allows us to improve our analytics to provide more value to our customers, and we expect that these figures will double again by the end of Q2. The life insurance market is one of the largest asset markets in the US, which is decades behind in technology, particularly on enabling the carrier's independent sales channel. We're here to change that. So thank you to the North Coast team, and thank you to investors for inviting us to present and your continued support. We're looking forward to a great 2021.
Thanks, Christy. Next, we have Gerald Hetrick, the CEO of Able, previously EmployStream.
Thanks, Daniel. Hello, everyone. My name is Gerald Hetrick, and I'm the CEO of Able. Able is one of North Coast Ventures' portfolio companies and has been since we did our first seed round, or our seed round about 4 years ago, a little under 4 years ago. So I want to give you a quick 4 or 5 minute update here on how things are going for us. So first, just as a quick reminder, we exist We built an onboarding product in the HR tech space specifically because hiring is a very complex process. It's ripe with stumbling blocks, manual and paper-based tasks, compliance needs, and usually takes a long time, and in a lot of cases discourages candidates, particularly in high-volume hiring environments, to complete the process or complete it with any excitement. Here, this slide I'm looking at here just talks a bit about all of the major milestones along the process of getting someone to work. Everything from initially, proposing the job, to people applying for it, to people onboarding for it, going through the entire process of screening and tax setup, and qualification, and all the things that make hiring a really complicated process. We specifically focus on high volume hirers, and for those folks that are hiring hundreds or thousands or tens of thousands of people or hundreds of thousands of people a year, this process is dangerous to their overall success if they can't get it right. Further, the experience that candidates go through is highly important. There's just an overwhelming amount of evidence that suggests that candidates that have a bad experience during the onboarding process typically do not make it all the way through, or do not particularly enjoy the job they start from the very beginning. 38% of candidates are more likely to accept a job offer with a positive candidate experience. Most candidates say the hiring process takes too long. So, all this says is that all this goes to say that there's a pretty major problem as it relates to high volume hiring and the complexities there. So we exist because we believe everyone deserves to have a great first day, regardless of whether it's a temporary job, or it's a permanent job, or it's a night shift, or it's a first shift, or it's high paying, or it's a low hourly wage job. Regardless of whether you're the only employee someone hires for the year, and thus they can spend a tremendous amount of time on it, or if you're one of hundreds they hire for a month, everyone deserves to have a great first day. So we've built a product, a platform that addresses this really around with three core principles in mind. First, automating as much as possible on the onboarding side. We really want to take away a lot of the guesswork and a lot of manual tasks associated to all of the steps along the process. Like we just talked about, have candidate experience in mind. The forefront of our platform is about candidate experience, making it being a very intuitive, easy to use process. And then third, really making sure it's fully integrating with all the front end and back end tools that people need to get through this hiring process. To that end, we've made it completely agnostic on all devices. It's a mobile first experience, completely responsive. Everything someone needs to do to go through this onboarding process really is presented to them in a very TurboTax like way to get them through in a smooth way. So that's a little bit of a background. One thing I want to talk about is kind of specific to us is how we weathered COVID. Our number one customer acquisition vehicle was conferences and trade shows. Those obviously went away, so we had to spend a lot of energy, a lot of time thinking about how we replaced all those leads. So we did things like building our own events, our own virtual events. We did customer-specific events to try and drive connectivity with our customers and thus some additional revenue out of that. We worked really hard on up-leveling our customer communications, particularly as we came out of our rebrand, and tried really hard to kind of pull leads from new sources, and it worked really well. Q4 was our greatest leads quarter ever, although they're qualified differently. They're not as rich as the ones that you get in face-to-face conversation at conferences. But we're pretty excited about how we're going to emerge this year and converting those leads into pipeline. And we've actually added a specific sales development person to do nothing but kind of nurture those leads. So that's a very quick update. I appreciate everyone's time. I just want to say thanks again to North Coast Ventures and all of the investors for all the support you've shown us. Thank you. Bye.
Thanks, Gerald. Next, we have Larry Kavanaugh, the CEO of Navistone.
Thanks, Daniel. Hello, I'm Larry Kavanaugh, the CEO of Navistone. North Coast Ventures has invested in every round Navistone's had, from our seed round in 2016 through to the completion of our Series B in March of 2020. Navistone is a marketing technology company. We're based in Cincinnati. We have 25 people who work for us. We also have revenue retention that ranks us in the top 5% of all SaaS companies. So what does Navistone do? We help companies advertise to people who visit their website, but then leave that website without making a purchase. Now, businesses spend about $250 billion a year to drive visitors to their website. Unfortunately, only about 1 to 3% of those visitors convert. The challenge is that the cost to advertise continues to go up, but conversion rate remains flat. So what businesses are doing is they're trying to figure out how can they reconnect with those people who they've already spent a lot of money to drive to their website. How can they reconnect with those people who have shown intent and do so in a way that gets them to come back to their website and make a transaction. And this is really what's called retargeting. Now, everyone in this meeting has seen digital retargeting in action. I'm sure you've visited some retail website, you've left that website, you've gone to a news website or something else, and you see an ad for that retailer that you visited earlier continue to show up as you go around the web. Navistone has a unique take on retargeting, though. Rather than show you a digital display ad, Navistone helps our clients send direct mail directly to the people who visited their own website and left without making a purchase. The advantage of direct mail is it can convert at a rate up to 50 times higher than digital display retargeting. Now, I mentioned it's also unique that what Navistone does. It's so unique that Navistone received a patent for the way in which we do this in early 2020. Now, when it comes to lowering customer acquisition cost, one of the best way to do so is to get warm introductions from people like you to potential prospects for Navistone. So I have a special offer today. For any warm introduction that happens before March 31st of 2021, we will give you a bottle of specially bottled bourbon from Weller's. So Navistone, about a year and a half ago, went out and tasted 5 different barrels from Weller's and picked the one that we thought was best. We had it bottled for us, and I have to tell you, it's delicious. So if you're interested in referring business to us and perhaps definitely getting a bottle of Weller's, please email me. My email's at the bottom. We'll be glad to talk to you about how best to introduce us to a prospect. I hope to hear from many of you soon, and thank you very much. Bye.
Thanks, Larry. Finally, we have Amanda Epp, the CEO of ScriptDrop.
Thanks, Daniel. And I'm excited to share a little bit more about ScriptDrop. ScriptDrop was created because everything can go right in the patient journey. The doctor writes for the script, the access barriers like a prior authorization are cleared, and the pharmacy spends time and energy dispensing that medication. But over 25% of the time, the patient doesn't do their part to pick it up. These are often prescriptions with little to no copay or critical medications. So ScriptDrop brings health to the home of patients, providing greater accessibility and convenience. Because we know healthy outcomes start at home now more than ever. Before ScriptDrop, pharmacies and health systems would have to piece together their delivery network, usually working directly with a courier company, maybe a carrier, which meant a pharmacist would have the burden of hunting down a late driver or figuring out a replacement driver if something happened, which is expensive and another thing healthcare professionals were asked to do on top of everything else. ScriptDrop provides comprehensive technology, reducing the administrative work of scheduling a delivery and connecting healthcare providers with a network of courier and carrier partners all in one place. Especially in an industry where delivery is more important now than ever, Amazon and other digital pharmacies are disrupting the space. However, ScriptDrop partners with pharmacies, allowing them to work together, providing faster and more convenient delivery options for their patients. ScriptDrop is special because we integrate into existing workflows throughout the entire patient journey. This allows us to reduce any administrative burden on the already overworked healthcare professionals and gives patients and providers additional safety nets to reduce the risk of a medication being abandoned. For example, when you leave your doctor, you might have every intention to go to the pharmacy, but life gets in the way. Giving you greater access and convenience to getting your medications to get healthy and stay healthy is what ScriptDrop is all about. So, how it's going. ScriptDrop has increased revenue more than 233% from 2019 to 2020. We've raised $30 million to date and have expanded our team to 108 employees. We are working with most of the retail pharmacy chains and health systems across the US and in 1.5 million deliveries in 2020 alone. In 2020 and beyond, we're continuing to expand and improve our technology, bring on new lines of business, and continuing to integrate deeply into the healthcare ecosystem. ScriptDrop, like a lot of companies, was dealt a very difficult hand in 2020, but one that would change the landscape of prescription delivery overnight. Our market accelerated by years and weeks, and companies that said they weren't interested in doing prescription delivery suddenly were. And in March, we knew that we were the only company that could offer prescription delivery to anyone from any pharmacy. So that's what we did, and we had to use quick innovation to get us to that spot. In a matter of weeks, we stood up a patient-initiated delivery solution in response to the pandemic to keep as many people safe and healthy in their homes, avoiding the pharmacy. We felt it was our duty, and we had to respond this way. And now patients know that delivery is an option like a lot of other things out there. Google searches have increased immensely and want pharmacies to support delivery options. This is an option that has been needed for a while, but the pandemic really brought it to the forefront. And getting better access to medications to your doorstep, it's the new norm. That concludes our update. Thanks to North Coast Ventures investors for your support, and thanks for inviting us to present. We look forward to a great 2021.
Thanks, Amanda. Well, I'm excited to hand things back over to Todd at Progressive as we move into the Fireside chat.
Well, thanks, Daniel. We are back at Progressive and pleased to welcome Tricia Griffith, the CEO of Progressive Insurance. As you may know, Tricia is a 30-year veteran of the company and rose through the ranks, starting as a claims representative. She held a number of senior roles, including head of HR, which is an unusual stop on the way to becoming the CEO of a Fortune 500 company, but a stop that Tricia credits with giving her a lot of perspective that helped Progressive turn into the company that values and established a culture in diversity and inclusion, one that was recognized by the Wall Street Journal just a year ago as the #1 company in the country for diversity and inclusion. Tricia has overseen tremendous growth at the company in her tenure as CEO and was recognized as the first female business person of the year by Forbes magazine 2 years ago. So please join me in welcoming Tricia Griffith. Well, thank you, Tricia. I'm sure you can hear the roar of the virtual applause in the background.
I do.
We are happy to have you here. And I might just start out with a question about why you are here. So you are the CEO of a $50 billion publicly traded company with 40,000 employees. And oftentimes the CEOs of those companies don't tend to think about the innovation ecosystem, the startup world, or the early stage investing world. So why'd you agree to be here?
Well, first of all, I agreed to be here because Jim Haas works for us, and he's an investor, and he's a great guy and super innovative. But that's not really the reason I would do it regardless. I've always seen Progressive as an innovation company, and we've always been a technology company, a data-driven company, and especially in the last 3 or 4 years, or at least when I got this job almost 5 years ago, I really started thinking about the future and making sure that I didn't lose sight of changing technologies, the competition of InsurTech and FinTech, and to make sure that I didn't have my head in the sand. And so as I thought about our long-term strategy, that had to be a big piece of it. And initially I thought, well, I could do it myself. But as the company grew, I realized that we need to kind of formulate a whole team that thought about this all the time. And that's really how I think about innovation and startups and investing. And so that's why I'm really happy to be here.
Excellent. And was that line of thinking the impetus for Level 20?
It was the impetus for the strategy team. So my very last interview for the CEO role, they said, what will you do with the company in the first several years? And I started thinking about it really with the McKinsey construct, so the horizons. And I knew we had a lot of runway in terms of more private passenger auto, more homeowners. We bought a homeowners insurance company in 2015. But what about the other horizons? And so I thought about Horizon 2, sort of understanding adjacent businesses we could have. So I've got execute, expand, and then the strategy team was explore. And I looked for a leader of the strategy after I had gotten the CEO role. and ended up hiring Andrew Quigg, who's been with the company for quite a while, has an immense amount of experiences around the company, and then he has set forth sort of corporate development, understanding what we'll call runway, so what's happening out there in the world, and then level 20, Azadeh Hardman runs that. That's really the incubator downtown Cleveland that is starting to think about how we can play in different areas and can we win. And to me, that's been an important part of my hopefully tenure. When I pass the baton over, I want to make sure the person after me has a really great game plan. It just wasn't, oh, we grew a bunch more auto, that we really grew across all three horizons. And for me, the important part of that is investing concurrently to make sure you have an enduring business.
So you mentioned the horizons, and as investors, when we think about the future, we often think in terms of secular trends, right? What are these big things happening, whether we like it or not? We know they're happening, we might not know how quickly. And when I think of the secular trends that must be in the back of your mind, it's probably not rocket science, right? We're thinking about gig economy, which is here today, self-driving, which is here between now and 5 to 8 years, and then the future of vehicle ownership. So how do you balance these different worlds, which will be here very quickly?
Well, I think you look at it differently depending on the trends you talked about, and those are exactly spot on. So for the gig economy, we wanted to be a part of that and wanted to be able to monetize that. So we work very closely with both Uber Eats, and Lyft on making sure we ensure the drivers that are on their platform. And so we continue to grow and understand miles driven, and of course, last year that dipped precipitously. So we wanted to make sure, how can we continue to work with the gig economy and ensure that area. So that's been a big part and a very successful part. The autonomous cars, that really is how level 20 started. I said to Andrew, think of 20 years from now, what do we look like? How can you create 3 or 4 or 5 businesses, not $1 million, not $100 million, $1 billion businesses that we can grow into, and assume that cars are level 5 autonomous. I think it'll take longer than most people think. And if you look back at the records, you'll see 2015, there'll be the headlines that all cars are autonomous. That said, it's not necessarily level 5. How safe can level 3 cars be, or level 4 cars? So we have got to be thinking about the whole addressable market in the private passenger auto segment. And that's really why we thought about level 20, actually, and Horizon 2 even, to be thinking about what are other areas that we can monetize to continue to have a really robust business. And I think if I had to bet, I would think that autonomy might come a little bit faster in the commercial area because there's some limited talent in terms of drivers. And think of it as on a freeway, you could platoon, one vehicle after another. So I think about that as well because we have a pretty large commercial auto business.
Terrific. So Tricia, as you know, we have a company in our portfolio, Remesh, which is a terrific company, world-class business with customers like P&G, Kraft, J&J, and Progressive. And it's been a lot of fun to see them work within the Progressive ecosystem and continue to grow. And I imagine, though, that there are thousands of startups who knock on Progressive's door every year. So how do you think about the pros, cons, and just approach to having a large organization like Progressive be in a position to work with these fast-growing but sometimes fledgling startups?
I think it's an important part of who we have been and who we will be. And so for us, working with Remesh has really added value. So you don't do it just to be kind and be nice. You want to add value to your organization. And what Remesh has done, especially at level 20, is really understand and help us understand how to bring the qualitative data to quantitative data quickly. And when talking with Azadeh, it's been really helpful for us to be very efficient in understanding what consumers want, and whether it's through the polling process and being able to change on a dime the questions that you ask, or even being able to show the participants visuals. To be able to say, if this looked like this, what does that mean to you? Because, in Azadeh's world, we are just at the very beginning of thinking about businesses that we think can be really big. But we need to understand that from a consumer perspective. And Remesh has been really valuable with that for us.
And so, Remesh connects to the advertising and the marketing spend, which is a huge portion of Progressive's budget. I read $1 billion a year. And I imagine you must learn a lot from using all these different channels, these levers, direct marketing, seeing responses. How do you think about the value of that data and the insights that you're learning on how to talk to consumers?
You're a little bit low on the budget, but I'm not going to go in. But probably the last time you read it, it was accurate. I mean, all those insights are so important because we want to understand share of wallet in each household. We want to understand the needs and will people want those. And obviously, some of the things that we're working on in level 20 is really direct to consumer. You know, we're really trying to. We've separated them from the mothership, so they can really think about ease of use. And that's how I think about startups. I think about the fact that they don't have the legacy systems and they can be really nimble, and that is going to be expected of all consumers. How can Progressive be that way even though we're over 80 years old? And that's really my goal, is to act like a startup for consumers and get those insights from Remesh and even our media buys in-house to understand consumers, what they want, what they need, and what they'll want to buy from Progressive.
So you mentioned the future of Progressive, the different horizons, and where Progressive is placing bets. But I also saw that Progressive recently closed an acquisition of what seems like a traditional property and casualty insurance company. Can you tell us about how you're focusing on the future, you're continuing to grow the core of Progressive?
Yeah, I can't talk too much about that acquisition because it hasn't closed, so I don't want to talk too much other than what we've said publicly. And that is, it helps us with a bigger addressable market on our commercial side and larger fleets and workers' comp. Other than that, I can come back next year once the deal's closed and tell you a little bit more about the transaction.
Take that as an invitation to reach out again. That's great. So these big publicly traded companies like Progressive are complex beasts. 20 years ago, someone might have said Progressive is an insurance company. Today, you might say it's a data company, an analytics company. What is Progressive at its core today?
I would say, and I believe Peter Lewis would say this, and his father started the company in 1937, and Glenn Renwick, my predecessor, would say that we're a technology company that happens to sell insurance. And it used to be happens to sell auto insurance, and now it's many different lines of insurance. But at our core, we are data-driven, analytical. Our segmentation is industry leading, and really using data to understand how to profitably grow.
Terrific. And any thoughts on what it takes with the ecosystem here so that we can generate the next 3 or 4 Progressives within the next decade?
I think a lot of what you're doing is the startups that think about it differently. So when you talk about Remesh, when I think of the focus groups that I've been a part of in the past, it's really tough to find participants. Sometimes they show up, sometimes they don't. Sometimes it's just for the money. But there's usually 7 or 8 people in a room. I'm behind the glass, and I'm trying to think of questions. And the person who is actually facilitating doesn't necessarily know insurance and doesn't have the algorithm behind it to say, go this route, or here's the quantitative stuff that's coming out of the qualitative conversations. I think I would have thought, if you would have said 2 years ago, we're going to do focus groups, it's going to be online, and here's how it's going to work, I would have thought no, because you have to be there in person. I think COVID did help to help innovation in terms of how you can do things differently and frankly better. And so I think having a bunch of startups like that, some will fail because that's just the beast, and some will be extraordinarily successful. But us being a part of that and being able to give that feedback from a big corporation, I think will be really important. So we're very supportive of startups and the whole ecosystem because it'll make us better.
I'd be curious, where does failure fit into the culture here at Progressive? I read recently that Jeff Bezos had a quote when the Fire phone died and lost $175 million that was our biggest screw up so far, and it's not going to be our biggest screw up in a few years, right? Just embracing failure.
Right. I would have said that I didn't embrace it as much until we started the strategy team. So what I said initially to Andrew and his team was, if you do this right, you will fail. And so that is just part of it. And you can't ever be really hugely successful unless you're out there on a limb. Then you can always step back. Obviously, we're a publicly traded company. We have shareholders, so I care deeply about being a steward of those dollars. But I also care about growing it on behalf of every stakeholder, but our shareholders as well. So I think we're really building in failure, and they know that that's an okay thing, and that they're going to, especially at level 20, they're going to try things that seemed great and just didn't play in Peoria.
Okay. And then last question, Tricia. It's always hard to say who's your favorite child. Progressive has so many interesting commercials and characters. Which one's your favorite?
Oh, it's so hard because in any given time, I find it differently. Right now, I'm a huge fan of Dr. Rick, mainly because when I was Chief Operating Officer, my CMO and a few of us sat in my office and we started talking about not having reliance on just Flow or the Superstore and really spreading ourselves out. And we started thinking about having a character that you become your parents when you buy your first home. And it's funny because it's true. And so many of those lines, we all just brainstormed, and they're things our parents said. And so I have an affinity right now for Dr. Rick because it's funny to me.
Well, I'm right at the age where that rings true and is scary, so I also enjoy those. It's hard to balance that between that and Baker as a Clevelander, right?
Absolutely.
Got to be high on that. But
yeah.
Tricia, with that, I will thank you once again and turn to camera 1 here and just mention to everyone at home to keep an eye on your email. Very shortly, the investors in our fund will receive an email that has some additional detail on the fund's performance over the past year, including videos of many of the companies that we were not able to include in the program tonight. And everyone who registered will receive an email with a survey link. We are hopeful that everyone will give us your candid feedback. We have a number of virtual events coming up this year, and we absolutely do read, look at, and incorporate the feedback that comes in. So please do share that with us. And with that, I will thank all of our presenters once again. Thank everyone for their support, and we look forward to a terrific 2021.